What's up guys, welcome back to the channel. In today's video I want to break down crypto derivatives, futures, options and swaps. So it is very clear that as the cryptocurrency market matures, traders and investors are actually increasingly turning to derivatives to manage risk and to also speculate on price movements and enhance their trading strategies. So with crypto derivatives, that includes futures, options and swaps. These actually tend to offer sophisticated tools similar to those that are used in financial markets, and I will be exploring in this video the different types of crypto derivatives, their uses, their benefits, and also the risks that are associated with them. So expect to learn what derivatives are all about, and also the different types of crypto futures and options and swaps, and also just the benefits of derivatives in general, plus the popular platforms that you can actually do cryptocurrency derivatives trading, and also some of the most popular trading strategies to use when you are trading derivatives. If you like the kind of content that I bring on this channel, make sure you hit that like button, subscribe, and always head on over to our main site, decentralized.news, for the best cryptocurrency exchange reviews, DeFi platforms, NFT marketplaces, all things that you'd need to learn about crypto. Make sure to use the links in the description and get started with your crypto futures and derivatives journey with us. So let's get into all the juicy details. So crypto derivatives are effectively financial contracts whose value is derived from underlying cryptocurrency assets such as Bitcoin or Ethereum, and these contracts actually allow you as a trader to pretty much speculate on the future price of that particular asset without actually owning the asset. So the primary types of crypto derivatives are futures, options and swaps. So when it comes to crypto futures, futures contracts are effectively agreements to buy and sell specific amounts of cryptocurrencies at a determined price on a future date. So futures can be both for hedging and also for speculative purposes, and there are two types of futures. So there's standard futures, which are contracts with fixed expiration dates. Then you have perpetual futures, which are very popular in the crypto markets, and these are contracts without an expiration date and commonly found on cryptocurrency exchanges. So the two types of uses for futures: hedging, which is where you as a trader are using futures to hedge against potential price declines in your cryptocurrency holdings; or speculation, where as a trader you can speculate on the price movements of these cryptocurrencies to profit from anticipated changes. So an example would be, if you're a trader that believes that the price of Bitcoin will rise in the next 3 months, you are in a position where you can actually buy a Bitcoin futures contract at the current market price, hoping to sell it at a higher price before that contract expires. So that's crypto futures in a nutshell. Okay, now let's move on and talk about cryptocurrency options. So options are contracts as well that give you the right as a trader, but it doesn't give you that obligation to actually buy or sell the specific amount of cryptocurrency at a predetermined price before or on the specific date. So that's why it's an option. You're getting pretty much an option where, for example, you can get a call option. There are two types, where you have this contract that gives you as a holder the right to buy the underlying asset. You can also have put options, which on the other side is a contract that gives you as the holder the right to sell that asset. Okay, so the uses of options are hedging as well as speculation, as much as the same concept applies in the crypto futures market. So options, where you're hedging, it's a position where you actually can now protect against any adverse price movements in your portfolio. When you're speculating on the price direction of a cryptocurrency, but with that limited risk. So I'll give you an example. If you're a trader, if you buy a call option for Ethereum with a strike price of say $2,000, expiring in 1 month, if Ethereum's price rises above 2,000, then you as a trader can exercise the option to buy at the lowest strike price and profit from the difference. This is why crypto options are very, very interesting, and they can also be very tricky. But last but not least, let's talk about the crypto swaps, because crypto swaps are derivative contracts where two parties agree to exchange cash flows or other financial instruments over a specified period. And there's two types of swaps as well. There's interest rate swaps, where the exchange of interest rate cash flows between the two parties occurs. You have currency swaps, where the exchange of cash flows in different currencies occurs. And you also have commodity swaps, where the exchange of cash flows based on the price of that commodity occur. So let's talk about the uses. Also, hedging and speculation, no different here. These are all financial tools for those specific purposes. When you're hedging using swaps, swaps can actually mitigate exposure to fluctuations in interest rates, currencies, or commodity prices. If you're speculating on swaps as a trader, you can use swaps to speculate on the price movements of the underlying assets. Okay, so I'll give you an example. A crypto lending platform uses an interest rate swap to manage its exposure to variable interest rates on its loans. So that's kind of a way you would use the swap mechanism there. But now what's more important is to understand the benefits of actually even dealing in crypto derivatives overall. So of course, risk management. This allows you to, as a trader, hedge against price volatility and protect your portfolio from, like I said earlier on, adverse price movements. You can also use it for leveraging, where derivatives enable you to gain exposure to larger positions with a smaller amount of capital, potentially amplifying your returns. Also, price discovery, right? Because derivatives markets contribute to better price discovery for you by pretty much reflecting market expectations above future price movements. When it comes to the liquidity aspect, the derivatives market enhances liquidity generally by attracting more participants into the space, including institutional investors as well, which just kind of brings a little bit more liquidity to the markets. But let's not act like derivatives do not come with their own set of risks, because they do. And you have to be aware of these risks if you want to succeed in the crypto markets. There's leverage risk, which is number one, where even though you can amplify your gains, you can also magnify your losses. So be aware of that. You have counterparty risk. Okay, so counterparty risk, on the other hand, in these derivatives contracts, for example, another party may default on their obligations, particularly if it's in the over-the-counter or OTC markets, we call them. Okay, so there's also just the general market risk, where, derivatives are subject to market fluctuations, adverse price movements, substantial losses can be occurred as well. And one important thing is to always remember, when the regulatory risk comes into play, it can be very severe. The regulatory environment, especially for digital assets or crypto derivatives, is still evolving. Changes in regulations could pretty much impact the market and participants. Okay, so also just the general complexity sometimes of these financial instruments that require a deep understanding of underlying markets and all these other mechanisms as well. But obviously, we cannot talk about crypto futures, derivatives, all of these things without talking about some of the most popular platforms to use. The go-to platform, I'd say, if you want a centralized platform, go to PrimeXBT. See, the link is in the description. This is a very reputable platform, offers you not only crypto futures, but also CFDs, commodities trading. You can trade Forex, high leverage, very secure platform. It's been around for a very long time, PrimeXBT. The link is in the description. There are also other platforms like BitMEX, which was pretty much pioneer when it comes to perpetual swaps in the crypto markets. You have other leading platforms like Binance. You have other platforms like derived and so forth. Okay, so when it comes to the strategies. But before I do that, actually, those are the centralized platforms. You need to also be aware of the decentralized platforms for crypto futures, etc. YFX is a really good one. The link is in the description. You also want to look at G-Trade, which is Gains Network. G-Trade, also you can do Forex, crypto, perpetual trading using the base asset DAI, which is the kind of a decentralized stable coin. It's very interesting. So check out all those links. And if you want to know the recommended platform, simply check out the link to our ecosystems tab on our main site, or just head on over to decentralized news. You'll see a tab where it says ecosystem, a whole list of platforms that we recommend that you go check out and do your own due diligence and use, because these are platforms that we've done reviews and used ourselves. So let's talk about some of the strategies for crypto derivatives trading. Hedging, which I've been mentioning throughout this whole video, using derivatives to reduce risk of those price movements that can be adverse to your portfolio. For example, buying put options to protect against a decline in the price of a crypto asset that you actually hold. You can also speculate by taking advantage of the price movements to generate profits. For example, buying call options. If you expect the price of a cryptocurrency to rise, you can do arbitrage, where you're exploiting this price difference between the different markets and derivatives instruments to make risk-free profits. And you also just can get into some spread trading, where you're simultaneously buying and selling two related derivatives in order for you to profit from the price between those two assets. So in general, crypto derivatives, including futures, options, swaps, offer you powerful tools for managing risk, for speculating on price movements, and for also enhancing your trading experience and your strategies. So they do offer a lot of benefits, a lot of downsides as well. So you always need to make sure you're doing thorough research, continuing to learn, making sure you're staying prudent in risk management, and having that kind of a mindset where you're always understanding the risks that you're taking before you dabble into something. If you want to learn more, hit that like button, subscribe to this channel. We give you risk-free, I'm talking about free crypto education. You can go to our main site, check out all the links in the description. If you want to support the channel, make sure you also check out the links to my books, and like, share, subscribe, turn on the notifications. I'll see you guys in the next video. Peace, love.